Hello, today is the 4th of June, 2022. We always start with our disclaimer. We go over our calls and then the weekends when we look at the long-term picture. It's my trading plan for Monday, June 6, 2022. Remember, I can be completely wrong. Any trade you make should be at your own risk. Look for the pattern with the early low, which this is, and Monday should be the pattern with the early high. We thought we had completed 5 waves up here. So far, it seems to be working. We had a few targets. One was 41.40.53. That printed, and there's resistance right at the target. The other target was 4091.46. Now that has a preferred time frame that runs through early Monday morning, so that target is still in play. But a new target, a higher target, was generated at 4129.98. If we don't gap down smartly, the rules call for that to print too. I'm not certain that one's going to print, but that's what the rule says. During the day, MEJT marked this as a false move, gives us the target. A number of conflicting patterns here. Here's a wall, here's a gap. Usually the wall with gap fills quickly. Within a day or so you rally back up, overtake the high of the wall, find resistance over it. That's the usual pattern, but it doesn't happen every time. And if you don't fill it quickly, at least by Tuesday's open, it doesn't have to fill anytime soon, and it's pretty negative stuff. On 1, 2, 3 of the last 4 days here, hit new highs. And then Friday you closed under all those highs. To me, that's a rejection of the highs and calls for lower prices if it holds at Monday's open. Here's a straight line move up, followed by an inside the day. According to Larry Williams, that should lead to a drop on Monday. That's one of his sell signals. It's just a reminder of what we said. We said if we dropped right from the open, looked for a strong decline. That's what we got here in next week's patterns. We've been showing a number of ways you can count resistance right at this week's high. This is just one more way. Divide this into eighths. There's 25%. Draw a vertical line from the high. Connect this low to all these eighths. You get resistance right there. So far it's working. General idea is we've completed a major top. We're going to have a significant fall, probably to somewhere in the area of 3,000 cash. But that doesn't mean we're going to go there in a straight line. We've completed an ABC from Magenta Wave A. Here was Magenta Wave A. We've now completed an ABC, and as far as the degree of it, we don't know. We don't know if it's of degree small black A, capital gray A, or even magenta B. What's significant here is you've stopped right at the 38.2% retrace of the last drop. And if we were going to have the usual pullback, it would be the 61.8. Now maybe that'll still happen. But if we stop here, it's a sign of further market weakness. We have a few dates coming up, Monday and Tuesday, and a few other days this month. And if there is a big drop, like a panic low, tends to occur on one of these dates with a little leeway of a few days. But the reverse isn't true. Just because you have one of these dates, it doesn't mean you're going to have a big drop. But if there is a big drop, at least it'll come on a date which fits according to that system, either one of these techniques. Well, I think it's impossible to count a consolidation like this with any degree of accuracy, but until the count fails, I'm going to stick with it. We had 5 waves up. You can now count an ABC with good fibs for A, and A, B, C for B. And if that's the right count, which we don't know at this time, there should be a wave light blue C down. And as far as how far it'll go, if we do have a crash, because that's possible here because of the date, one place I'd look is about a 161.8 multiple of this wave A. And if so, if that happens, would stop at around 39.92. $39.92 is a 50% retrace of the last wave up. So if it happened, it would make sense. That's one place to look for a stop. Of course, I don't know the degree of these waves here. That's one target. It's not the only target. You could even retrace the whole thing with some other techniques. But if there is a drop right from the open, if it happens, there is possibility it'll stop around 39.92. Signals are mixed. We use these rules. Monday's pattern is really high. We could still gap down. Typically, it's a rally day with a final hour high. Failure is a straight line drop. It is bullish. There's a higher MEJT target, and if we don't gap down smartly, the rules call for it to print. Now, the gap after Thursday's wall should fill at some time and often fills promptly, but if it's not filled by Tuesday's open, it doesn't have to fill anytime soon. So that's bullish. What's not bullish, what's bearish, is we have a lower target still in play through early Monday. The inside day after the straight line rally gives a Larry Williams sell signal. We've rejected multiple new highs by closing under them, and the wave count's compatible with one more leg down. Monday is one of the days on which a panic bottom could occur, and if that happens, there's wave balance around 39.92 cash. Now, other numbers might work too. Just because that works doesn't mean it's the only one that works. I think we have a decent chance of a sizable drop Monday, but it's not a lock, and if we don't drop pretty much right from the open, we don't have to stay wedded to the idea. It's one plan, but I'm not saying other plans can't be explained. I just think that's the plan I have as of this time, for a big drop probably to around 39.92 cash. And if that doesn't happen, we're not going to have to risk money on it. So Monday's pattern has the early high. Typically it's a rally day, but if it isn't, it's a straight line drop. And if that's how we start, I think that's how we'll finish. And that's today's call.